So welcome, everyone. The Homestead Investment Cooperative acknowledges that we stand on the traditional territories of the Nihio, Dene, Nakota Sioux, Anishinaabe, Niitsitapi, and within the Métis homeland under Treaty 6. This land, a historic gathering place for diverse Indigenous peoples, shapes our commitment to fostering innovation, cooperation, and shared growth. We honor the enduring presence and deep connection of Indigenous peoples to this land, drawing on their traditions of resilience, respect, and community to enrich our collective endeavors in Edmonton and across Alberta. With gratitude, we embrace our responsibility to engage with reconciliation, respect Treaty 6, and cultivate partnerships that contribute to a legacy of mutual respect, understanding, and prosperity for all who share this land. And one of the reasons why right now we focus on Treaty 6 is because the Alberta Block building and our first project is located in Treaty 6. So as an introduction to Homestead Investment Cooperative, Homestead Investment Cooperative came about a little over 2 years ago. I was looking at opportunities to create investments in this building, and it was something that talked about for about 10 years of ways to build community in the building, but also through an investment vehicle. And from 2015 onwards, I was looking at different types of mechanisms and structures that could be used to lower the bar for investment in commercial real estate, because it's not very often that you can invest in commercial real estate for $10,000 minimum investment. For a lot of private investment, especially for downtown Edmonton, you're looking at hundreds of thousands of dollars as a minimum investment if you want to buy a commercial building downtown. So this is an opportunity to invest in the first building in a portfolio of cooperatively owned Alberta real estate assets, powered by co-working and starting on Edmonton's historic Jasper Avenue. And why did we choose the Community Investment Cooperative among all of the different vehicles available to us? We like the local empowerment aspect, that investing in your own backyard and your community. Shared prosperity, so all ships rise together with the cooperative model. The social impact, we know we already have a lot of social impact businesses that have come through our building and been very successful, but also the ability to impact our community through investment and build wealth together. Democratic decision making, so it's one member, one vote. Everybody gets the same vote at the annual AGMs and gets to be a part of the strategic vision for the project, and also opportunities to be on the board and get more involved if they want to. Greater political influence, so we know that we're attracting some of the brightest, most innovative minds in Alberta to this project, and people that are getting things done in their respective industries. And we suspect that once we are up and operational and running, and building and have a strong community throughout Alberta, that when there's issues to address in Alberta's business community or in different areas, that we will have broad reach and connections within our group. And then the long-term vision aspect. So, this is not a get quick rich model. This is something that is going to be considered a 5 to 10 year investment tenure. And I know that from real estate investment that long-standing cash flowing assets is the best way to grow wealth through real estate. And so we're looking for a 5-year minimum commitment. So it starts with me. So I was part of the purchase of the building after CKUA left the Alberta Block in 2012. We purchased it in 2013, and it had not had any renovations or major capital input for over 60 years. So there was a lot of renovations to be had. We gutted it, took it back to structure, upgraded some of the structure for a future rooftop patio. We did a big deep energy retrofit to make it energy efficient with low operational costs. And then the vision was to fill it with small businesses and entrepreneurs and creatives And that's what we've been doing for the last 10 years. When post-COVID, once again, I wanted to look deeper into the opportunity to not just have a community within the building and within the spaces themselves, but actually add a community aspect to the investment side, and started to talk to smart people that I know and looking for advice. And one of the first ones I spoke with was Don Iveson, and he saw the vision right away and was very excited by the idea, especially when we looked at the cooperative model. And then we've added additional board members. So we've got Jacqueline Cardinal, who's founder and CEO at Nahayawin Storytelling and Education Social Enterprise. Kyla Kazale, who's co-owner of Bamboo Ballroom, Bamboo Stock Room, The Common, 9910 and Foos Repair Shop. And she's actually one of our tenants in the building on the main floor. Heather Kirschbaumer, who's founder and CEO at Golden Acre Seeds. She runs a 4th generation family farm in the Peace Country in Northern Alberta. And Ahmed Abdelrahman, who's co-founder of Solus, which is a fractional talent marketplace for small businesses. So a little bit more about the building. So I talked a bit about the history of it. So it was the home to CKUA from 1950s to 2012. So over 60 years. It was built in 1909 and was home to one of the first Alberta Treasury branch locations in Edmonton. It also had a furrier at one point as part of the fur trade. And so it's got a rich history of commerce and arts and culture and music, and is now home to small businesses and entrepreneurs. I mentioned that it went through the deep energy retrofit in 2013 and 2014. So we really wanted to focus on positioning the building for the next 100 years and giving it an opportunity to provide low operational costs to our tenants. It's currently leased with a 4% vacancy. It's currently appraised at 8.85 million. And we have an opportunity to add additional revenue by developing the rooftop patio. So that picture in the bottom right corner is a picture of the roof where we upgraded the structure, and we can actually turn that into a rooftop patio. And then we still have some additional basement suite that can be turned into storage. So a bit about the market. The commercial real estate vacancies in downtown are decreasing. There's been conversions to residential and some transactions that have occurred in the last 12 months. But there's currently few opportunities for smaller investors to participate in ownership in commercial real estate in Edmonton. Our areas of emphasis would be focused on growing and underserved companies and organization types, providing services that go beyond co-working and create a community, creating investment opportunities for members and the community. And we believe that if we have stronger tenants, we'll have a stronger building, which will then create a stronger co-op community, and the cycle continues. So our focus will be to grow companies, make a major contribution to our economic revitalization, create wealth for investors and tenants, and expand the model to other communities. The member services that we provide within our co-working space in the building is spaces that companies can grow in, ongoing peer mentoring requirements through our kinship program, connection to social enterprise and social impact organizations across Canada through our extensive networks, the ability to invest in the real estate owned by the co-op, access to our co-op investor network, and connection to our co-op alumni member network. How will we build revenues? So mainly through our tenant rent revenues in the building itself, but we also provide ticketing for premium professional development events. And some examples of that can be seen on our social media. We hosted some speaker panels and live podcasts last fall, and we plan to do so again starting this spring. Eventually, we'll have brokerage fees for spaces that tenants graduate to. So over the last 10 years, we've had several businesses actually outgrow our space. So they may have started with a desk or a smaller office, and then they added additional employees and started to grow and moved into bigger offices. And eventually it made sense for them to go and get a lease with a lease somewhere in a different building. And so if we can't provide that additional building space for those tenants, then we'll be referring them to other landlords. We'll be looking at space rentals on future amenities. And right now, throughout our building, there's various spaces that you can rent for different sized events, right up to 300-person events down in Foos Repair Shop on our main floor. And then future real estate acquisitions. So we want this to be the first project of many. We want to invest in communities across Alberta, and we look forward to those expansion opportunities once we've purchased this first building. So the deal structure is a $9 million deal structure. And scenario one, which is our preferred scenario, is to raise 100% of the capital through private investment. This would allow us to take a hard look at the refinancing terms and negotiate really good terms to then take those funds out and expand and purchase more buildings. So it allows a faster expansion to the next purchase of future buildings. Scenario two would be to raise the majority through the private investment, but then finance the balance with a commercial mortgage. So that one's also doable, but that will obviously reduce our ability to go and buy future buildings right away. We can still go buy future buildings, but we'd have to do another raise to do so. So we started with a phased raise approach. So phase one was friends, family, and close business associates. And that's now closed, and we are now in phase two, which is our public offering memorandum. And to incentivize the early adopters, the first 1 million raised will receive a 4% discount on face value of shares. And the second million raised will get 2% discount to incentivize early commitment. So just as an example, so if you were investing $10,000 and you were taking advantage of that 4%, then you would actually pay $9,600 for those $10,000 worth of shares. There's 3 classes of shares. One is the Class A membership share, and that's a $250 one-time fee. And you have to have, that's the one that allows you to vote at our AGM and makes you a member of our cooperative. And then once you're a Class A, you then choose between a Class B, which is $10,000 minimum with $1,000 increments, or a Class C, which is $100,000 minimum in 5% increments. We're projecting annual returns of at least 6% based on our current leases, which does not include any gain in value in the building or pay down of mortgage over time through the rents. So there would be additional gains through that, but because that's looking too far into the future, we can't project that at this time. And one benefit I'll mention about the Class C investors, because we know that that will attract more experienced investors, likely experienced in real estate. We wanted to give those investors a voice and seat at the table for the board. So they have been allotted one board member position to represent their voice and their interests at the board table. So for the founders are serving as the initial board. They fronted all costs to date and have committed to $280,000 in share purchases. Founders and directors do not receive management fees. We do receive shares in exchange for closing on the deal. So that only occurs once we've received some performance milestones. Our board can consist of up to 9 directors. So we're currently at 6, so we have room for a few more directors, plus that Class C member at our first AGM, and 1 member, 1 vote at annual general meetings. So your role as an investor would be to join our mentor community and help the next generation of leaders, creators, and innovators thrive. Refer like-minded potential tenants, mentors, and investors. So we're looking to expand our investor network and participate in 1 member, 1 vote general meetings to make key strategic decisions with the co-op community. One of our first orders of business will be to create a 5-year strategic plan, and we will be bringing that to the investment community for input and feedback. Another incentive for being an early adopter is we've created the H100 Club. So that's the first 100 member investors will receive recognition in a prominent place in the Alberta block, so like the lobby. And then an original H100 keepsake for display in your office or home. So just as an overview of the offering terms. So the issuer is Homestead Investment Co-operative. There's 3 classes of shares, the Class A membership share for $250, Class B membership investment share for $10,000 minimum for $1,000 each, and then Class C membership investment shares, $100,000 minimum, $5,000 each. Our offering amount is minimum 4.625 million raise, so that would include the financing option, and then maximum $9 million raise. That would be where we raise it all through private investment. Our voting rights are 1 member, 1 vote at the annual general meetings. And then, as I mentioned, the Class C shareholder group may elect 1 board member. The rights on dissolution are proportionate share of net assets after liabilities. Dividends are paid out based on annual operating results, and those will be presented at the AGM. The time horizon, so as I mentioned in the beginning, we're looking for minimum 5-year investment before redemption, unless under extraordinary circumstances. So that doesn't mean that you can't sell your shares sooner. You can actually sell them starting 4 months after your purchase date. And you can sell them to a new member. So if you had someone you wanted to bring into the cooperative, you could sell them your shares, and that would have to be approved by the board. Or you could sell them to an existing member, and that also would have to be subject to approval by the board. The 5-year redemption, that would be if you wanted to sell the shares back to the cooperative as a whole, which at the 5-year mark will have gained some equity, and we'll be looking at refinancing. That will give us an opportunity to increase our equity gains in the building. So the use of the funds raised. So as I mentioned, in the minimum raise amount, we would have a 4.375 million building down payment. We would have $150,000 in closing costs. So that's the accounting fees and the legal fees and the consulting fees and, appraisals and all of that. And then we want to have $100,000 working capital fund just for anything that might come up in the first year of operations. And then, so that's for the minimum raise scenario. For the maximum raise scenario of 9 million, we would put a down payment of 8.75 million on the building. So that's the agreed to purchase price for the building. And then have $150,000 closing costs and $100,000 working capital. I'd like to mention that investment funds are held in trust with their lawyer until the building sale closes. So if it doesn't close, then those funds are returned to the investors in full. One thing I haven't mentioned yet is that this investment is RRSP and TFSA eligible through the Canadian Workers Cooperative Federation. So you can invest a new RRSP and TFSA, or you can transfer from an existing with an existing financial institution. Currently, the building sale closes April 30th, and we have our offering open until March 17th. So why does this matter? So we believe in Alberta and we believe in Edmonton, and we think that this is a place where builders, creators, and investors can shape the future of our economy and influence the future of our not only our province, but Canada nationwide. And we believe that Homestead Investment Cooperative will become a beacon of growth and prosperity in our province. And we want Albertans to join our growing community of investors, creators, and builders. And just as we've been hosting these webinars and getting questions, I just wanted to create an FAQ page so I could answer some of those questions that have come up. So is it difficult to sell shares in a co-op ownership model? What if I want to get my money out early? So as I mentioned, there's that option to sell your shares to a new member or to an existing member 4 months after the close on the issuance of your shares. What are the benefits for investors who live outside of Edmonton? So that would be diversification of your investment portfolio. So if you live in Northern Alberta or Southern Alberta or even in other provinces, You know, if you're investing in real estate, usually it's real estate that's in your backyard or ones that you can that you live close to. This is an opportunity to invest in a different market, and it's an opportunity to join an investment network that's going to be mainly across Alberta, but could also include members from other provinces. And so as we grow the investment and as we grow the portfolio, you're going to be building relationships with people that are like-minded and want to invest in the future of Alberta. What is the difference between this investment in a GIC or an investment in a REIT? So with a GIC and a REIT, you don't often get to see where your money's actually going and touch and feel the assets, go visit them, go into the businesses that's inside those buildings and really have a say and a vote on the strategic vision and future of the organization. So with this cooperative model and one member, one vote, it really democratizes real estate investment. And what is the desired next addition to the portfolio? So we really want to go where our investment energy is from within our investment community. So depending on where our network grows and builds across the province, I think that's going to determine heavily our next 5 buildings that we're going to purchase. And we want to go where there's energy with tenancies and entrepreneurs, but also energy with the investment backing as well. So that's going to be determined with that 5-year plan. So next steps, if you're interested in investing, you can sign up for the investor portal by either emailing myself at grow@homesteadcowork.ca, or you can go to our website and there's buttons there to purchase Class B or Class C shares. And then you can set up your investor profile on the investor portal. You can download and review the due diligence documents on the investor portal. So there you'll find the building condition report, the appraisals, cash flow projections, this document here, this pitch deck, the full offering memorandum, and an offering memorandum term summary as well. So a number of documents that are important for you to review. And then if you decide to invest, you can start investing, or you can set up a call with myself if you have more questions, and I can walk you through the portal or walk you through any of the questions you have about the investment. You can also tour the building by emailing grow@homesteadcowork.ca, and I will set you up with our staff in the building, and it's accessible Monday through Friday, 8 to 5 p.m. So with that, I'd like to thank everybody for joining. Up on the screen here is the contact info and the address for the building if you would like to come and do a tour. And I look forward to hearing from you and hopefully seeing you in the building. And now I will open it up for questions. So I have a question here. How much has been raised so far? So we are now almost at 550,000 in the raise so far. And in the future, how will board members be selected? So that's through a voting process at the AGM. So it's by votes and ballots. You can nominate board members. There's term lengths, and then yeah, it's all done through our AGM. And if anyone has a question that they want to speak to, you can just raise your hand and I'll call on you. Oh. Okay, well, thank you everyone for joining. Again, apologize for
Tegan,
yep.
There's one more question in the chat.
Oh. Okay. Will each new purchase require a new share offering and investment? So not necessarily. So if we raise more than the minimum and up to the maximum, and then place financing, whatever is remaining left over, we have a choice as a investor group of what to do with those funds. We can invest those funds in the next project. We can return those funds if people want their money out. There's different decisions that will be made at that time. So it's just a matter of fact of how much we raise with this current offering memorandum. And this does take a lot of effort, and it is time consuming to put together. So obviously, the more we can raise with this offering, the better, because then that will allow us to accelerate our growth and expansion for the future. So we don't have to go through another offering memorandum. What is the policy for compensating board members? So we do have a number of board policies that we have created. In the offering memorandum, the full document, it actually shows a table and details on exactly what the compensation is for the current board members based on the years of work that we've put in and how it gets issued and when it gets issued. So all of those details are in the offering memorandum. What if HIC does not have enough money to cover unanticipated costs, maintenance, surprises? So that's why we've created that $100,000 float or cash fund that we'll have in a savings account that we would tap into. There's obviously additional revenues that would come from the leases in the building after paying the expenses. So those will build up over time, and we can make decisions at our AGM what to do with those funds. So if there is a repair that's needed, we would report on that. We'd be getting competitive quotes. All of that due diligence and process would be followed. And Andrew, I see you got your hand raised.
Yeah, you bet. Thanks, Tegan. Just a quick question here. I was reviewing some of the due diligence docs in the portal the other day. Not sure if there were some older docs, but there was mention of potentially also purchasing Homestead co-working. Can you maybe talk about if that's still part of the vision here and how that aligns with the future aims of the co-op?
Yes, yep. So that was not part of this deal just because we didn't want to muddy the waters and make anything complex. We wanted to make it clear this is investment in real estate and there's an asset attached to that, and it's backed by the real estate. The Homestead business itself, we've put in a letter that has been agreed to that we will come to mutually agreeable terms and start within a year of the purchase of the building. And eventually, like I always saw the co-working space as being owned by the cooperative or folding into the cooperative at some point. So either it's through a purchase or it's through the lease ending. The lease ends in 2029. And when I started the co-working business, I never wanted to do it alone. It wasn't intended to be the me as a sole entrepreneur running the business. I think it needs to be run by a cooperative and a community-minded board. So it's a natural fit down the road for sure. And who owns the building now? So it's owned through a limited partnership. I'm a small minority shareholder in it, and then there's a majority shareholder that owns the building. Okay, well, thank you everybody so much for joining, and thank you for your time. And if you have any more questions that come up after this webinar, just reach out to me. You've got my number on the screen. I'm also at that email address. So I look forward to hearing from you and receiving any more questions you might have.